won't walk out on love. I'm here forever. You can push me all you want. I'm forever, boy. You give me love. You give me love. Well, you got that something, something that I like. Ooh, I got it, baby. Stay with me tonight. Just give me love. Oh, give me love. Just give me love. Oh, give me love. Just give me love. And I'll be loving you. And I'll be loving you. Give me love.
All right, guys, welcome. We might get this show on the road now. Okay, so we a few people have been asking me about doing an FTX walkthrough for a while. We touched on it last Friday, but a few people missed out, and also I didn't really go that far into depth. It was just a quick walkthrough because we're a little bit unorganized. So I thought today we may as well do something a little bit more thorough and go through it sort of start to finish. Today I do have Milan on with me, and he's going to be going through, if there's any questions as I'm going, he'll sort of make note of it and stop me every now and then and ask those questions if I haven't already covered them. Now, I'll give you a quick idea of why I swapped to FTX first. I dabbled in it a while ago just because it was a new platform that came out and it looked promising, so I gave it a quick go and I didn't mind it, but one thing that I didn't really like, which is the same reason I don't really trade on Binance, is all the futures contracts are settled in US dollars. And whilst the crypto market was bullish, it makes a lot more sense to hold your base asset in Bitcoin and have Bitcoin settled futures. So all your rewards and all your profits are paid in Bitcoin. That way you're sort of compounding your gains over time. So I predominantly trade on BitMEX. It's where I sort of cut my teeth learning how to leverage trade, and I've been trading on there for the last 3 years. So that was awesome through the bull run, but I always had the plan that when the market turned from bullish to bearish, it now makes no sense to hold the base asset in Bitcoin and be paid in Bitcoin because it's a depreciating asset while the current trend is heading down. So my plan was always to move back to a USD settled futures exchange, put my base asset back into USD and be paid my profits in USD, because at least that'll be holding value throughout the market rather than, having a win of a couple of $100 or $1,000 or whatever it might be in Bitcoin, only for 2 weeks later for that $1,000 to be worth $800. It doesn't make sense. So that was always my plan. And when the market went bearish around 50,000, when we broke that distribution area, that's when I sort of sold out of my holdings of Bitcoin. I jumped off BitMEX and went back onto FTX because I just found it ticked more of my boxes. Now, I've had a long discussion with a fair few traders about like pros and cons versus Binance and FTX. And this isn't one of those things where one's better than the other. I truly believe that most exchanges have pros and cons that suit different people. And like Binance, for example, it's one of those exchanges. It's built more for mainstream. They try to make it easy to use, like big buttons and things like that. They have a massive range of assets. So they have all your altcoins, all your fresh coins, new listed stuff. You've got access to all those. Their futures side of things, they've got a massive range of assets that you can trade there. They try to make it fairly easy for you to trade on those platforms. They also, Binance also has a lot more features like liquidity swap. You've got the savings platform where you can earn interest on your coins and stuff like that. So as a whole, Binance has some really cool features that suits a lot of people. If you're the kind of person who likes to get access to those freshly, new to exchange coins and things like that, Binance is probably going to be where you want to be. They're great on fees. They've got a good fee structure with BNB coins and things like that. So there's a lot of pros for Binance. But for me, I don't chase a lot of those new altcoins. So for me, that's not really a benefit. The savings platform on Binance, like I definitely take use of interest earning platforms and stuff like that. But there's a lot of them out there. You've got Celsius and crypto.com and Aave and Comp and all those sorts of things. And a lot of those other sort of platforms have much better interest rates than what Binance does. So I don't use the Binance interest rates either. I'd rather use, say, Celsius or crypto.com for that. So again, that doesn't really tick my box. The liquidity swap thing to become market makers, that's a pretty cool feature that FTX doesn't have. So, that's a good tick on that box. If you're wanting to hold some coin, whether it's, Ethereum or Sol or whatever it might be, you can put it in the liquidity swap and hold onto the coin, but make little pieces of it through trading transactions and fees, becoming a market maker. So, there's some really cool features. There's some really good plus sides to Binance. One of the other cool things on Binance is coin futures, right? So there's not a lot of assets you can trade on coin futures, but the cool thing is you can trade specific markets, whether it's Bitcoin, Ethereum, ADA, and all that sort of stuff. And your payouts or your winnings, your gains are paid in that native coin. So that's where you get that, especially if you're going long on it, then you're going to compound those gains as well. So not only are you making more, say, Bitcoin profit on the trade, the Bitcoin's also worth more. So you're sort of compounding that reward. However, the flip side of that, being paid in those native coins when it's going short, because you're using that as your collateral, that asset as your collateral, if you go short on it, you may make more, but your entire holding is now worth less. So you're actually losing money. It's very counterintuitive. So it doesn't really make sense to use coin futures if the market is bearish. If the market is bullish, 100% coin futures it's the same theory as using BitMEX in a bull run. You're being paid, your base asset is held, your currency or your account is held in a base asset that is increasing in value, and all your rewards are also paid in that coin. So you're compounding a reward, and that's the same theory as coin futures. However, when the market goes bearish and you're shorting, it's not a very good idea. The base asset you're holding is depreciating and losing value. Your rewards you're being paid are losing value. It's kind of a losing game. You're making more of something that's becoming worthless. So that doesn't make sense. So again, that doesn't really tick my box. And there's not a lot of, there's a few assets on there, but there's not a lot. Switch over to FTX. The layout of the platform, the advanced features you can use. They have a quant zone for quantitative trading. If you're into coding and doing quantitative style approach to trading, they've got heaps of cool features there. They have a wide range of assets. And for me, they've got enough for me. I really only trade a few markets. I only trade high liquid stuff. I don't really trade new coins. I don't trade hyped pump and dump stuff. I really stick to, say, Bitcoin, Ethereum, and then whatever's sort of got a lot of high volume at the moment, things like Sol and Link and ADA and things like that. As long as there's a lot of high volume and there's a lot of liquidity, then I'll trade those markets. And FTX sort of covers all those bases. So it ticks all the boxes for me. And a lot of the stuff that Binance does pretty cool as well. I just don't use those features. So for me, it makes no sense to use it. The other thing that's a little bit uneasy for a lot of people right now is I know there's a lot of FUD around Binance, and look, I haven't looked into it too much myself because I don't hold anything on Binance, so I don't really care. But there's a lot of FUD around it at the moment with different countries shutting down exchanges. I don't know the whole deal of it. I think it could just be typical headline blowout when realistically it might be nothing. That's normally how it works in crypto. China bans crypto, and then you find out it's just they just did one little thing. but it just gets blown out into a massive deal. And I kind of feel like that's what's happening with Binance at the moment. So yeah, I think just a lot of people are uneasy and looking for other options. So I thought let's dive into this and show you guys around FTX. So to start off with, I'll sort of run through as I'm going, sort of start to finish, and I'll sort of talk about all the extra features and stuff like that as I'm going. But in terms of like account creation, it's much the same as any other exchange. You can go to set up an account, you put in your email, password. You want to set up your 2FA for security. You probably got to get an email for confirmation and things like that. So I don't need to run through that. I'm sure you guys have all set up exchanges before, so there's no need to really show you how to do that. And I've already set up a test account here, set this up the other week that we had a little muck around on. So I just transferred a little bit more money in here so we can have a proper play, and I can sort of show you how to do this. So this is a setup account. I've already done the security with the 2FA, which is really just for transferring coins and things like that, just a little bit of extra security and for logins. So let's go dive in. So this is just called account. Now we'll go to our wallet to begin with, and you can see I've got $200 worth of USD in here. And you know, here's all your different assets that you can have in FTX. I've got nothing else in here, so they're all zero balance. You can check your deposit history, your withdrawal history, any current positions that you might have open. I don't have any positions open at the moment, so there's nothing there. And all your fills and all that sort of stuff. Now, there's also another really cool feature. So I should say to deposit. So if you were, say, transferring some Bitcoin or Ethereum or Tether or whatever it is you're transferring from, say, another wallet or another exchange like Binance, for example, it's much like any other exchange. You hit the deposit button, you've got your addresses. So with USD, you can send through Omni, you can send it through the Ethereum network, you can send it through the Tron network or the Sol network. Each of them have different sort of speeds and fees and things like that. Just make sure you're sending things to the right address from different exchanges. But I don't think I need to run through this. This is just pretty standard stuff. I'm sure you guys are all used to depositing, withdrawing and depositing different crypto and funds from other exchanges, but much the same. You copy your address, you send your money here, bam, it appears. Yeah, different coins have different sort of times that it might take as well. Withdrawing's much the same, just exactly how you'd send it to another account. Or another exchange or whatever. You can choose the asset that when it comes to USD, you can withdraw in any of these USD coins or stable coins. And then, you know, Bitcoin, for example, you can just sort of transfer it there. So you got your 2FA code just to transfer as well. Now, the other cool thing is they've got a convert function, which is very similar to, say, on Binance, they've got liquid swap, or I think it's just called swap, where you can, it's essentially swapping one coin for another on the exchange, but you're essentially you're applying liquidity to the market. You're buying out of the books and stuff like that. So there is fees and there's spreads, so you cop a little bit there, right? So this is another cool feature that I like with FTX is you can actually convert your assets within the exchange, and there's no fees. There may be a very small spread, but it's not a lot. So just to give you an idea, I'll go convert. So I've got $200 or nearly $200 worth of USD. So you can see I've got USD here, and I can choose to swap it to something else. Say, let's just go Tether, for example, and I'll just type in 10. And you can see here, it's going to cost $10. There's the USDT price. There's a slight difference in USDT because it doesn't sort of stay the same. Zero fee, convert, and it's pretty instant. So you can see how I've just literally converted roughly $10 US to $10 worth of Tether. And then it's just as easy to convert that back if you want to. So there's our Tether, and we're going to convert it back to USD. That's the amount of money, convert, bam, and now it goes back pretty much straight away. Now you'll find that there's like barely any difference in price when you do that. FTX don't charge you any transaction fees there. It's just on that spread. So that is how you can do a transfer or convert. Now, the next thing I want to talk about, which I think is another really cool, probably one of the best features, or one of the best features that I like about FTX, which is the ability to create sub accounts. So at the moment, I've just got the one account, and this is the main account, right? You can't change the name of this main account. It's always going to be called main account, and you can leave it as that. But the way I like to explain this is by setting up different sub accounts, especially when it comes to, say, traders, you might want to create a different sub account for a different type of strategy that you might use. For example, say you're experimenting with some scalping, for example, you can just press create. You can call this scalp, create another account, and you've just created a sub account called scalp, and it's virtually has its own wallet, and it's like you've just set up another account with a different email, but it's using the same email and it's all integrated. It has its own wallet, its own trading base, and all that sort of stuff. But you can see there's nothing in here at the moment because I haven't transferred anything there. Now, the reason I think this is really cool, that there is a reason we want to do this, and this is to isolate margin, which we'll get into a little bit later. But another really cool reason you might want to do this, it's to separate different strategies or whatever it is that you might be doing. So let's say, for example, you've got a long-term hold account. So we'll just call it your hold account, right? So on this account might be something where you do a bit of buy and holding. Say you want to do some long-term investing in specific cryptos that you think might be really cool. Well, then you can purchase those assets. You can purchase some Ethereum, you can purchase some Litecoin, whatever it is, and you can put it in here, and you know not to touch this account because this account is isolated. It's a separate account, and it's got all your holds in it, your long-term holds that you don't want to touch, and it's just a good way to sort of separate, your strategies in case you've got the inclination maybe sell some of your long-term investments instead of separating from your trading account. And then maybe you've got another account that's called swing trading, and this might be where you do all your swing trades. Now the cool thing is you can just transfer money or funds or coins, whatever you want to do, between each account. So you can see on my main account I've got roughly $200 here, so I can just click on transfer. I can choose the coin. I've only got USD, so that's all I can trade. And our source account is our main account, and our destination account, we've got our 3 different accounts that we just built up then. So let's just go to our hold account to begin with, and I'll just transfer, say, $50 over to that. Bam, hit that button, and it's all instant, and there's no fees. If we go to our hold account, you'll see now there's $50 US in our hold account now. All right. Now let's go back to transfer, and we'll choose USD. And what we're going to do is we're going to go from our main account to our scalp account, and we're going to transfer, I don't know, we'll just transfer, say, $120 to that, right? Oops, sorry, 120, transfer, bam. And you can see now if we go to our scalp account, we've got $120 in there. And if we go back to our main account, you'll see that we've only got $28 left there. So but it's up to you. You could use like the main account as your hold account, and that can be where you put all your long-term investments in it. For me, I use it as like just a gateway. So funnel money in and move it around to different accounts. And then, I'll put some coins and stuff in my long-term hold account and tell myself not to touch that. And then I've got a swing account where I do my normal swing trading. I've got a scalping account if I want to muck around on the smaller time frames. And then I've got another account that I just call test. And it's something I just play around with, different strategies, mucking around. I don't have a lot of money in there. It's more just testing out different things and having a play when I'm bored. And you might come across a new strategy that you really like and go, hey, this strategy is really cool. I'll create another sub account and trade that strategy on that account only. And the cool thing is, by having these sub accounts, can you easily do, you can delete it. You can go into your in here when you go to sub accounts, sub account settings, you can change the name, you can delete them, you can do whatever you want there if you like. So let's go back to the wallets for a second. So we're on the scalp account. Sorry, what was it? Oh yeah. So the other cool thing is, with these separate sub accounts, you can actually check your P&L per account. So say I'm on the I'm on my scalp account. You can see up here it says scalp. You can click that and go to P&L. Obviously, I haven't done any trades here, so it says 0. But the cool thing is with this, if you are using different strategies on different sub accounts, maybe you've got a specific swing strategy you use on one account. Maybe you've got a specific swing strategy you use on another account, and then you've got like a scalping strategy you use on another account, so on and so forth. So you can sort of have different strategies for each one. And the cool thing is you can actually check your P&L per different type of strategy and see what's sort of working for you. And you might be able to go, hey, that swing strategy that I was trying there, my P&L is not that good. It's not doing that well, but the other swing strategy I'm doing is working really well. I've got a high P&L. Maybe I need to focus a little bit more on that. So that's kind of cool as well, being able to, isolate different accounts and check to see how they're going. So that's pretty cool. So that's pretty much all I want to show you there on the wallet side of things. Pretty simple. I'm sure you guys understand all that. You can sort of filter through here. So we've got our all balance. If you press that, it deletes everything else and it's only just all your crypto. This is just your leverage tokens. And then this is all your fiat options, because you can hold a fair different amount of fiat currencies. You can see you've got Australian dollars and stuff in here as well. Global British pounds, euros, Singapore dollars, so on and so forth. So you've got a fair few options to hold different fiat currencies there as well. Okay, so jumping into the markets. Now what I'll just quickly do, go back to the main screen here, because they've got this nice button layout here. You do actually have the exact same options here, but I just thought I'd show you here because it's a nice visual. So there's a few different markets to trade, and there's markets within the markets as well. So you've got your futures markets, which is all your, so you got your futures markets, which is all your leverage trading. There's perpetual and there's quarterly futures as well. So, perpetual contracts are going to have your 8-hour funding fee. Your quarterly futures are not going to have funding fees, but they'll have a settlement fee if you run to the date of completion. You've got spot markets. So a lot of people are sort of like, oh, it's only leverage trading. No, you can actually spot trade on here as well. There's a ton of different cryptocurrencies you can buy. They're paired against US dollars, and they're also paired against Bitcoin as well. So we'll jump into that shortly. Now, cool thing, I don't really use it myself. I trade the stock market, I trade the US and the ASX markets, but I don't use FTX. There's a lot of, again, this comes down to sort of like Binance having those cool features, but there's other platforms that do it better. And that's how I see the stock market on here. Now, if you're somebody who doesn't have accounts on say US markets and things like that, but you want to have a little dabble, you might really like this feature. But just to be transparent, this stock market feature on here, it's very illiquid, right? There's not a lot of assets to trade. There's the main ones, a lot of the high tech stuff, high volume tech stuff, but the liquidity on the exchange isn't the best. So it's a little bit slow, but it's cool, right? It's a cool feature. If you're into that, if you've never bought stocks before, you don't have accounts set up on US exchanges, and you want to buy some Apple or whatever, I'll just quickly go on here and show you what you can get on here. So you've got your Grayscale Bitcoin Trust. That's pretty cool. Silver USD, which is a bullion trust. Sorry, kids are just making a bit of noise. Alibaba, Amazon, Zoom, Tesla. We
started putting some UPJs in.
Sorry. So you've got all your main ones that people want to get access to. GameStop, if you're in for a bit of fun. Square, Netflix, Apple, all those sort of things. So you can see there's a fair few assets there, but there's not tons. You don't get access to the entire New York Stock Exchange or the NASDAQ. You just got access to a few different ones. But like I said, liquidity is not the best. So it's not like crypto, right? That's one of the best things about crypto is how fast, how volatile, and how liquid it is. There's a lot happening. You can get in and out of trades. I'll just quickly click on one, for example, Netflix. And you can sort of have a look here how that's a little bit choppy, right? If you're only ever traded crypto before, you'd probably look at this and go, what the hell is going on with that? This is kind of normal when it comes to stock exchanges. However, a very liquid asset like Netflix, for example, it should be a little bit more than this. So this is just an indication of how low the volume is within the exchange, of the access to the liquidity providers that FTX has on the stock market. So again, it's a cool feature. I think there's other platforms that you can do this better. So that's up to you. But like I said, if you're one of those people who don't want to have all these different exchanges and platforms and things like that, but you want to have a little bit of exposure to say Apple or whatever, then you can do that through here, which is pretty cool. Leverage tokens. Some of you guys might have seen these on Binance. These actually were built by FTX. They started the leverage tokens, the synthetic leverage tokens. And then Binance really liked them, so they got them over onto they're from FTX. They're not Binance native tokens; they're actually FTX tokens. I kind of feel like you should probably stay away from these. These type of tokens, they sound really cool, but the way a synthetic leverage token is designed, if you've ever traded like bull bear stocks and stuff like that, you kind of understand how they work with leverage, any sort of synthetic asset. The rollover happens every 24 hours, and essentially you don't really want to hold on to one of these assets for a long term. They will literally go to zero. Like the longer you hold them, the more chance you have of going to zero. Best case scenario, if you're holding, say, a bull token, which means the price is going to go up, and the price just continued to go up for weeks and weeks without any major pullbacks, yeah, you'll probably make a lot of money. But the way these tokens are designed to reset each day and roll over your winnings into purchasing more, either more position or deleveraging, you will end up going to zero. So stay away from them because most people are going to be struggling a little bit. Yeah, Superhero is probably one of my favorite to trade on the ASX. $5 brokerage fees, minimum lot size of $100, which pretty much wipes any other Australian stock exchange access out of the water. A big range of assets and things like that. Pretty cool platform. And the other cool thing is they just announced it. I don't know if you guys saw it on my Facebook yesterday. They've just released access to the US market as well. So we can now trade fractional investing with zero brokerage fees. There's zero brokerage fees on the New York Stock Exchange and NASDAQ, which is really cool. So you can actually trade US stocks now on Superhero, zero brokerage fees, and fractional investing. So if you wanted to put a couple $100 into, say, Amazon, but you can't afford to pay a $3,000 one share, you can buy a couple $100 worth of Amazon and you'll just own a fraction of the shares, which is pretty cool. Anyway, that's off topic. Now, the volatility market. So this is kind of cool, but this is more for gamblers, right? Because these are pretty full on. So these are Bitcoin move. You've got options, volume. These are more like betting derivatives. So the way these work is, if you can imagine, every 24 hours, Bitcoin settles at a current price. And then the next day it may move, say, $300 or $400 from the current price, or it might move a couple of $1,000 from that current price. The way the move contracts work is basically that the distance in dollar value that it moves is what happened then? I've lost my chart. May have just started. The distance that it moves is basically the difference that the market moves here, and it can be quite volatile. So I wouldn't suggest you go playing on there. You'd want to get your head around how to trade markets properly before you start doing that stuff. It can get pretty nasty. So maybe give that one a skip. Cool that it has it. If you're into that sort of stuff, if you want some high risk stuff, then it's there. Prediction markets. This is again sports betting style situation. There's not a lot of assets you can trade on here. They have like the Olympics, Donald Trump winning, things like that. Again, it's cool. Not something I use. Not something to get too excited about. Another cool thing is they do have your Forex. So you can do some Forex trading and stuff on here, which is kind of cool if you don't have access to that through another exchange. And then they do have staking. Now, they don't have a lot of things with staking. I'll just click on that. You can see there's only a few different coins you can stake. It's cool that they've got the option, but again, places like Binance and things like that do this a lot better. Celsius, crypto.com, there's tons of different platforms that do this so much better. So I wouldn't get too excited saying, oh, FTX does staking. It's not that big of a deal. It's there. They may build on it. It's a very innovative platform, so they'll probably expand on this, but don't get too excited. It's there, but whatever. This is more of a trader's platform. Okay. So let's jump into the spot market. And I'll just quickly sort of show you how this works. So at the moment, I'm filtering USD. So these are all the crypto coins or assets that you can trade against USD. So you can see there's a fair few there, and they do keep adding to them. Some of these ones probably wouldn't have a lot of volume, so give them a bit of a miss. But there is plenty there as well. Some of the higher volume stuff isn't too bad. You can also filter it this way. I'll turn USD off, and now you're using your Bitcoin to purchase these assets. So you can trade Bitcoin markets and you can trade USD markets, whichever you prefer. So that's pretty cool as well. Now, I've only got USD in this account, so that's all I can do. So I'll just click on one. Let's go down to Sol, for example, and we'll show you how this works. I'll show you how we can customize some stuff, but you can see up here, here's my different accounts, right? And if you scroll down here, hang on, I need to reset this because I wanted to unlock first, my bad. I'll show you how to do all this in a second. So if I go on to main account, you can see here, I've only got $28 in this account. You can see down here, $28. If I click on swing, bam, I've just moved straight over to that swing account. If I click on hold, now I've gone over to that hold account. You can see I've got $50 there. If I click on scalp, you can see I've got $120 here as well. So you can see you can quickly swap between your different accounts or your different sub accounts and start trading on them. So I could essentially buy some Sol here on my scalp account and then go, you know what, I actually can't, like, because I see a trade in here, but maybe I actually want to hold some as well. So you can then click on hold and you can buy some here and you can hold it. So that's pretty cool being able to do that. Now, so this is the interface now. I'm a big fan of simplicity, and as a trader, I want access to a nice big chart. I don't care about order books and stuff. They move too fast to really digest any sort of information there. So I don't really need to look at it. All I want access to is a nice big juicy chart to play with. I need access to type in my orders. And I do want to look at my open orders and things like that from time to time. I don't need to see it on the screen at all time, but I need access to it. So you can customize your screen just like a few other exchanges like BitMEX, for example. You come over here to settings. Reset layout is basically what I just did. And you can actually lock your layout so you can't accidentally move some stuff. So I've unlocked it at the moment. And what I'm going to do first is, like I said, I want a nice big chart. So I do that. Now I've got a nice big chart, and these are fully integrated trading view charts as well. It's not some subpar thing. You've got full functionality with all your tools. I'll show you how to do that in just a sec. Now this is my order where I place my orders. I want that big as well, right? Because that's where I'm going to do a lot of the work. So I make that nice and big. There's nothing here at the moment, but when I go into some more stuff, you'll see how there's information there I need to see. Then I scroll down again. I said I don't need to see order books or anything like that. I want access to my my open trade, so I'll put that there. Just move these around. Like I said, I don't really need to see these, so it doesn't matter. But if you want to have a little bit of OCD, you might play around and get these the way you want it. Again, this isn't how you need to do it. You're going to have your preferences. You're going to do things your way. This is just how I like to do it. On here, you can see your balances. I'm only holding USD. So that is how you do a real simple layout. And if you're happy with your layout, say, yep, I really like the way this is. You can click on settings, press lock layout, and then bam, now you can't accidentally move something out of the way, right? It's going to stay where it is. Now to get access to your tools, there's a little blue button here. Click that. Oh, what's going on there? Have I paused? Something's paused. Just refresh for a second. There we go. All right, so you push that little button there and you've got access to all your tools on TradingView that you'd normally use. If you click on the little arrow, you've got access to everything that you'd normally use on TradingView. You got access to all your indicators. It's all just your standard sort of stuff. And then, what I normally do, because this will default back out of the way, and that gets a little bit annoying because sometimes well, most of the time you're going to want access to all your tools. So what I do is I just go and find all the tools that I normally use, and I just put a little star, like you click on the star. So I'll just go to say horizontal line here, click on the star, and that's now up there. And if you go down to here, sorry, I skipped a little bit then. This little star here, that's what turns your favorites bar on. You can see that disappearing and reappearing. So that's our favorites bar. So the reason I want that there is because I just want quick access to these tools. I'm not really going to play with all the fancy stuff. I'm only going to be using trend lines. I'm going to be using Fibonacci. I might draw a few boxes, and I'm going to put my long and short tool on. That's about it. You're not really going to get too funky when you're just doing some basic TA on the exchange. So I just want access to those tools. And by setting it up this way, it means if I log out and log back in, my favorites are going to be here, and I don't have to keep clicking on here to go to my tools. I'm just going to get nice, quick, easy access to what I need to use. Now, this is the basic order book. All right, so this is how you place your orders. This is just a basic function. You've got options for limit orders, market orders. Obviously, this is just going to enter a trade straight away. You've got your stop market. You've got stop limits. We've got trailing stop losses, which is cool. Take profit limit. I never really use. I think they're pointless. And then you can switch here between sell and buy. You can do it here as well, but just a quick one to do it there. But I don't have any SOL, so it's saying deposit SOL. I don't have any, so we can't do anything there. So what I'm going to do now is just do a really quick basic. I'll just do I don't think I really need to run through market orders and limit orders and stuff with you guys. I'm sure you understand how this all works, but let's just say we're going to do some basic TA to begin with. So we see a little bit of a squeeze coming, and let's say we think price is going to go up. Wherever it might be going, that doesn't really matter. We're not going to get too funky with this. I'm just going to do a real basic order here. Now I've got $120 in this account. So let's just buy, say, $20 worth of these coins. So you've got the option to either go, you can type in the amount of coins you want to buy. You can type in the dollar value that you want to buy. Or you can just move the sliding scale up like this. And I'll show you how we can use this to our advantage a little bit later. But for this exercise, we're just going to do that. Actually, I'm going to go back to the hold account, and we're going to buy $20 worth of SOL on our hold account because we just wanted to purchase some. So we just press buy, bam, we've just bought at market $20 worth. And you can see here, our USD balance has now gone down to 33, but you can also see in our balances here, we're holding half of the SOL coin as well. Which has a current USD value of $16.90 because we just paid some fees and shit as well. And that is it there. You can see here, we've got a little arrow. I'll just zoom in there. Literally as I bought, the price dropped. You can see that little, I don't know if you guys can see it, there's a little blue arrow. That just gives you an indication of where you got in. So when you're doing a lot of trades, it's pretty cool how it can show you where you got in, where you got out. It doesn't show you the exact price. It just shows you the exact candle. You got in on that candle and you got out on the next candle, and so on and so forth. So now we own some SOL. So now we can actually set up a sell order. We couldn't set up a sell order before because we didn't have any. All right, so I'll just delete. No, actually, so what we might do is I'll show you how to set up, say, a trailing stop loss, for example. So a trailing stop loss. Now, we've identified that we want our stop loss this big. We've entered the market here. And what's that stop loss there? Says $1. So if I move the mouse here, it's going to disappear. Oh, no, it's not. Oh, yeah, it is. So just below my little hand, you see it says stop, and then it says $1.8225, and then it says 5.38%. So what that is, that's $1.82 under the current price. So what I can do here is type in $1. Oh, sorry, what was it again? $1.8225. Right, so that's under the price, and you can see we're going to sell 20. Size too large. Okay, so I don't have enough of this. That's why it's not going to let me do it. Bugger. Let me go back to buy, and I'll just buy some more at market. Yep, buy. Now it might let me. Trailing stop. $1.8225. Okay, so now I can do it. So you can see here, I've got 0.5. If it drops down here, then it's gonna stop me out. But if the price continues to go up, then that stop loss is going to trail up with it, if that makes sense. So I press sell. Now that order is placed. You can see there's a couple little arrows here as well. And basically what that's going to do, it's going to trail under the price by, so basically there's a stop loss sitting here. It's like a one-way stop loss. If the price continues to come down, you can't see that because that's a shitty color. If the price continues to come down like this, it's going to stop me out here for however much that I put on there. However, if the price continues to go up like this, then this stop loss is going to continue to follow up the price by $1.82. All right. Now, if the price then decides to come back down like that, again, this stop loss is going to stay put and it's going to stop me out there. Still a small loss, but not that big of a deal. So you've got the function, the ability to do trailing stop losses. You can do buy stops and sell stops by using stop limit. So you can go to buy and use a stop limit, and you can set a buy stop. So let's say, for example, we want to, I don't know, let's say if price gets above there, we want to buy. So we can type in $36.06, and our limit price we'll put just a little bit under to make sure, sorry, a little bit over to make sure we get in. I probably don't have enough money left in this account. So what I've got 16 bucks. So I can drop this back down to say whatever. And now I can put that in. Now that is going to place a buy stop there. You can see it's got our little thingy in the book here. Now, if price comes up here and hits this price, whoops, then it's going to buy. It's going to enter that trade and purchase some SOL. So you can use buy stops, you can use sell stops to enter trades, whatever you want to do there. So that's really cool. Now, you can also modify these by moving them around, which is really cool. You can't do that on, say, Binance, for example. It's something you can do on BitMEX. So you can, if you want to make a slight adjustment, if you go, hey, hang on, I actually think, you know what, I feel like I got that resistance level a bit wrong. I think it might actually come here. So you can do something like that, which will then, automatically adjust the price for you. So you don't have to delete it and type in a new number. You can just grab it and drag it. And if you press that X button, it'll just cancel that order for you and it's gone. Okay, so now that's your basic orders, right? That's just your basic orders, your buys and your sells. But there's a much better way to do this. And if we click on this little calculator button here, we've now go to more of an advanced trading setup. Now, going back to a same sort of scenario, I'll do a limit trade so we can see our order in the book. So let's say that was your trade setup. You believe the price is going to come down and go up, and you got stop loss protection under here. You can see all your prices here. So here's your take profit in green. The bottom gray one here is your entry price. And then the red one down here, that's your stop loss. So you can see we're on a buy, that's a sell, but we're buying the asset. So as soon as we start typing in a price here, that's going to change. So we're going to a limit order, because at the moment it says market. So if I type in $33.6250, that's now our limit entry price. Our take profit is going to be $36.235. And our stop loss is going to be $32.7975. Now you can see our percentage gain, you can see our percentage loss, and you can also see exit P&L. So if this was to play out, that's how much profit we're going to make. If it was to get stop loss, that's how stopped out, that's how much you're going to lose. And this is our risk to reward. It's a 3.15, right? So that's based on $7, using $7 to purchase this. So if I up that a little bit, if I type in a new number or whatever, you can just drag this around. So you can see exactly how much you're going to win and how much you're going to lose. You can see those numbers changing down here. All right, like that. Now I'll just leave it, say there, for example, press place order. Now all three orders go into the book. You can see there's my my buy to get in, there's my stop loss, and there's my take profit. All right. I'm not in the trade because I did a limit order, so it's not doing anything. It's just there, ready to go. Now, this is the way I trade. I trade very automative. I do aggressive entries where I wait for price to come to the best spot, get in and done, right? Now, the reason I do it this way is because I don't want to sit in front of the computer watching the charts, waiting for things to happen and then going, okay, I'm going to get in. I want to go, this is what I think's going to get. This is what I think's going to happen. This is how I'm going to play it. I set it up and I'll let it do its thing. Now I can walk away. I can go play with the kids, go for a run or whatever, and not have to worry about it. It's going to, I lie, I wouldn't go for a run. I'd go for a walk maybe. So I don't have to do anything, right? It's just going to do its own thing. If price comes down here, bam, this is going to enter the position. All right. If it keeps dropping, it's going to stop me out. If it happens to go into profit, it's going to take profit. And I don't have to do anything. It's going to do it all itself, right? So that's really cool. Now, just like before I showed you, if you decide, hey, you know what? I actually feel like my take profit is a little bit too high. I don't think it's going to go that high. You can grab it and move it down. All right. And that's just adjusted my take profit. Maybe your stop loss. Maybe you go, oh, geez, I didn't realize there was a wick there. Maybe I need to move that wick. Okay, cool. You can grab your stop loss and you can drag it down. All right. It's going to ask you to confirm that you want to do this. The reason it's doing this is because by moving your stop loss, you're actually risking more money. Okay. So, that might take a little bit. There we go. By moving my stop loss, when I first entered this trade, you remember it said I was going to lose, say, 25 cents or something like that. Well, I just moved my stop loss. I'll actually be losing more money. You'd have to sit there and do the calculations to work that out, but you've just got to be aware that if you're going to move your stop loss lower, you're going to be risking more money. If you make your stop loss higher, then it doesn't matter because you're actually risking less money. So that doesn't really matter. But if you move it lower, you're going to be risking more money. And it's the same with moving your entry price as well. So this is your buy limit. If I move this down, it's going to ask me to confirm because I'm going to be changing the amount of money I'm risking. In this instance, I'd be risking less because I'm moving my buy entry down. So my stop loss percentage will be smaller. However, if I moved it up, then I'd be risking more money again. So it's asking you to confirm if you actually really want to do this. Okay. So yeah, that's a cool feature. Just be mindful that if you are going to increase your stop loss or change your entry price, it will adjust the amount of risk that you are using. So just keep that in mind. Moving your take profit, that's not going to change. They're not going to ask you to confirm it because it doesn't make a difference to how much you're risking. No, it doesn't have leverage on BTC pairs. We'll get to that very, very shortly. So say I don't want to do this anymore. Too easy. I can just cancel. Actually, what I'm going to show you is in another scenario where, for example, we came down, we got our entry. So we're now in this trade, but then we came down and we got stopped out. Okay. Now, what you got to remember when I put these trades on, these are actually reduce only style positions, right? So if that happens, so I got my entry and then I've been stopped out, this stays in the book. Now, it's a reduce only position. So even if the price then comes back up and hits here, it won't actually sell anything. It'll just disappear. It'll just cancel out because it's not actually there. Okay. No, Ben, this is just generic FTX. It's not my personal account, not my personal trading view. So yeah, just remember, like, those orders will cancel themselves out like that. You won't end up getting stuck into another trade. Okay, so that is the basics of spot trading. Now, if we want to go back to our wallet, so we're on our hold account. If we go back to our wallet here, you can see we have $16 USD and we've got SOL. We've got nearly 1 SOL. You can choose to stake it if you want to stake it. I'm not going to stake it, but you can do that if you want. Or you can even just convert it back. So I just go convert. You can do a trade and try and make profit. But if I'm just like, you know what, I don't really want to hold any SOL. So I can just go back to USD, choose maximum, convert, and get my US dollars back. And you see that cost me like 6 cents. I lost like 6 cents in that whole process. But possibly some of it happened just because SOL went down. So that's nice and easy to get in and out of positions as well, if you needed to, rather than waiting for your trade to hit, for example. So that is spot trading now. Fees, right? So fees is a big thing. If you do scroll down there's a little button here you can click on, which goes to all the fee structure. So you can see exactly how much all the fees are and the different ways they do it. But it is much the same as most exchanges, the way that works. It's pretty cheap. So market maker, so there's a difference between market maker and market taker. I'll just quickly explain that. A market maker is somebody who places a limit order, and you're essentially placing an order into the book for somebody else to take. So what you're doing by doing that is you're supplying liquidity to the exchange, which is good. They want that. That makes an exchange better, right? So by doing that, you get rewarded by a discount in fees. So becoming a market maker and placing an order in the book, your fee is a 0.02%. If you're a market taker, which means you're taking an order out of the book, you pay 0.07%. All right. So there's a higher fee for a taker as opposed to a maker. So just remember that limit orders pay less fees. Taker orders pay higher fees. Now, when it comes to leverage, if you're using 50x or above, there is another 0.02% fee added on top. If you're using 100x or above, which it only goes to 101. So if you're using 100x, then it's a 0.03% on top. So that way a market taker fee would actually be closer to 1%, and a market maker fee would be around 0.05%. Now, you've got to remember that's on your entire position. So if your position is, say, $100, then that'll be a 0.1% fee of $100. It doesn't matter how much margin you use or how much leverage you used. It just depends on the size of the position itself. Now, the other cool thing is with FTX, they have a token called FTT. Now, it's much like your Binance token, only I think by holding Binance, I do believe you get a reduction in fees, and you can also have the fees taken out of your BNB. They don't do that with FTT. You can't take the fees out of FTT. But by holding FTT, I think you got to hold 25 of them, I believe. You actually reduce the maker fee to 0. So you actually don't pay any fees as a market maker. So by placing limit orders, you won't pay fees, which is really cool. They have a tiered system. The more FTT you hold, and also the more traded volume you have. So if you trade a lot, if you got a lot of volume, those fees will get reduced, and you can actually end up getting a rebate similar to BitMEX. So BitMEX actually rewards market makers with a rebate of about 0.035% or something like that, which is cool because that's the way I trade. So instead of paying fees, I get paid just to trade on their exchanges, which is really cool. FTX doesn't do that straight away. However, it does reduce your fees, which is pretty cool. The minimum, Lindley, I think it's about 25. If you click on the fees thing, it goes into that and you can see all that sort of stuff. How do you change the colors of the candles to white? You can literally just right click here. Sorry, let me just do that again. Double click on there and you can change all your scales and stuff here. And that stays there. If you log out and log back in, it'll stay there, which is pretty cool. It's just, I just like this. I think it's a little bit more visual appealing for me rather than the big bright green and red. And I really only use volume as an indicator, and I don't need to see if the volume is green or red because that's not really important. I prefer to just to have gray just to give me an idea of volume, and then that line is just a moving average. Sorry, moving average of volume. So it sort of shows you how the volume is sort of increasing or decreasing, and you can change the length of the moving average as well. How have you linked your trading view to? I haven't, Callie, I haven't linked it. This is just FTX trading view. That's all. Okay, so let's go to the leverage side of things. So I'll go to my scalp account because we don't want to leverage trade on our hold account. Remember, that's our long-term stuff. We don't want to mess with that. We're going to go to our scalp account to do this. All right. Now let me just chat. You can change all your time frames and stuff. I don't need to run through that with you guys, I'm sure. Okay, so now we are on leverage and we're on BTC. All right, so that's cool. Probably the most liquid market that we can play with right now anyway. Now, what you do need to understand, and this is part of the reason I said we're going to get to this later, is the whole idea of having these sub accounts. With FTX, and anyone here who's ever traded Forex before will understand what cross leverage is. We normally tell people to stay away from it when it comes to crypto because it is very volatile and a lot of people are very novice when it comes to trading. Sorry, I should say people who trade crypto are generally pretty novice because it's more of a starting platform. Professional traders will already know how to cross leverage and don't worry about it. But if you're very new, you can get yourself in a lot of trouble with cross leverage. What cross leverage does, it actually uses your entire account as collateral on a trade. So if you don't have a stop loss and you enter a long or a short position and it doesn't go in your favor and starts eating into your margin, you're actually using your entire account as margin. So to give you an example, if you accidentally made a mistake, you entered on high leverage and it was the wrong way and trade goes against you and you didn't have a stop loss. Say you've got $10,000 sitting in your account and you might have only put a couple $100 on a trade. If that trade keeps going bad, it's going to start eating into that $10,000 and it can get to a point where it can completely liquidate your account and you'll end up with zero. To give you an idea, like people say, that's stupid. Why would you do that? It happens. People make mistakes. A particular friend of mine a few years ago made a simple mistake and forgot about cross leverage. He accidentally entered a trade on cross leverage instead of isolated. He woke up in the morning and he had lost $400,000. Simply because he put a trade on, he forgot his stop loss, he accidentally entered on cross leverage, woke up in the morning, didn't go to plan, thinking, oh wow, I might have lost a couple of $1,000s. No, he lost his entire account in a day. And it's just from a couple of simple mistakes. So if you think it won't happen to you, you're wrong. It will eventually. The people who say it won't happen to them, it most likely happen to them because they're too they just believe it will never happen to them. So they're probably not as cautious. So cross leverage can be really, really bad, right? And that's why we normally advise people not to use it. However, when it comes to professional trading, whether it's futures, options, or forex and things like that, and commodity futures and things, that's just the norm. That's just how we do it. But there's ways to combat that and not get yourself in trouble. A lot of professional exchanges will have guaranteed stop losses and things like that. Very high liquidity, so you don't get missed or anything. And most of the time, you probably know what you're doing and wouldn't over leverage yourself anyway. But it is something you need to be very cautious of. And FTX is just like that. It's a very professional platform, and it is all cross leverage. So if you're not aware of that, you need to just get your head around it first. But the cool thing is, and this is one of the other benefits, and this is how most Forex exchanges do it as well, by creating sub accounts, you're essentially isolating that amount of money to that account, so you can't get yourself in trouble, right? So let's say you had all your long-term investments, and say you had $100,000 worth of long-term investments. You don't want to risk those as collateral against margin on a bad trade. So what you can do is create a sub account and put maybe $1,000 in there, and now all of a sudden that $1,000 is all that is locked up in that margin. And your holding account, your long-term investments can't be touched. Even if you get into a bad trade, forget a stop loss and run into a whole heap of drama, you're not going to lose all of your money. You're only going to lose that $1,000. Worst case scenario, you're going to lose that $1,000 that you had in that isolated account, because you isolated that amount of money in there. It can only take what you've got there, right? So that is how you do that, to not run into issues of chewing through your other collateral. So, and the leverage you use, so if you guys are used to trading on, say, Binance, for example, what you're probably used to is setting leverage per trade. So you might have a trade on, say, Bitcoin, and you might be on 20x. And then you might go and enter another trade on, say, Ethereum, and you might enter that on 5x, and so on and so forth. With FTX, the leverage that you put on is set across the entire account, so entire sub account. So on this scalp account, we're going to set our leverage to 10x, which means every trade you do is basically using 10x of your account, but it's using your entire account or your entire sub account as collateral. So you can actually hold different assets in here. So the cool thing is, say if you didn't want to hold USD, say if you actually wanted to hold Bitcoin, well, you can just hold Bitcoin and you can still trade the futures markets, and it will actually just use your Bitcoin as collateral, as margin, to place those trades. So that way you never have to go, oh, well, I need to sell all my, so like on Binance, for example, if you want to trade the futures markets, you actually have to sell your Bitcoin, purchase USDT, and then start trading with USDT. The downside to that is, if Bitcoin goes on a run during that period, you're holding US dollars, not Bitcoin, and you've just lost, or you've missed the opportunity to gain there. So the cool thing is, it will actually use your entire account as collateral, depending on no matter what assets you're holding, or it's a range of assets, rather than needing the actual asset like US dollars or USDT. So that's another cool feature as well. Hopefully that makes sense to you guys. But so you can have this account set on 10x. And then say on your hold account, maybe you can just to make sure you don't accidentally make any mistakes, you can set your hold account to 1x, just in case you make a mistake somewhere that you shouldn't have. And then maybe on your swing strategy, you might have 5x, right? So you can sort of set the leverage per sub account and not get yourself in trouble there. So if we come back to our scalp account, you can see we're on 10x. Okay, so that's cool. You can move it around. All right. So now we're going to do some leverage trading, and we're on 10x, and we've got an isolated amount of capital of $120 in this account. So what we're going to do our TA again. What are we on? Bitcoin. Who thinks, what are we doing on Bitcoin right now? We sort of ranging. Anyone want to throw out some TA at us? It's not the juiciest market to trade right now. Let's have a look at something else. Let's go Aave. I was playing around with some stuff on here earlier. Okay, well, that's in a bit of a downtrend, right? Here's our downtrend. Oops, wrong button. Here's our downtrend. There's a bit of support here. So a bit of a squeeze coming. We could break to the downside. So let's just put on a short position. Maybe we'll take profit around there and we'll put our stop loss above here. So maybe that's the trade that I'm looking at taking. I'm hoping I can get that's white, gray again. So I'm hoping I can get an entry here and then it will break this level here and then hopefully come down like that. And that'll be our trade. So I'm going to put this trade on. And the cool thing is we've got all our numbers here. You don't have to sit here and muck around. You can see it all. So we're going to come over here. We're going to type in our price. Just delete that. And we're going to type in 318.46. Our take profit is going to be 282.90. And our stop loss is going to be 324.88. Now, this is the cool thing that I think a lot of you guys are going to be, really like. So when it comes to position sizing and risk adjustment and all that sort of thing, a lot of people are using calculators and they're trying to work it out and they make mistakes. They don't understand what's going on. The really cool way to do this, especially when it comes to leverage trading, because you know how much you're going to be risking. We know our account's $100. What's 1%? If we're going to use a 1% risk plan, tell me what's 1% of $120. Anybody? $1.20, right? Okay, so we can just grab this slider. Now you can see down here, you've got our exit P&L, we've got our stop loss P&L, and we've got our risk to reward. All we got to do is slide this until it says about $1.20, roughly, whatever. You can try and get it perfect if you want. And that's now done. Position size is done. Did you know? You can see here, it says it's going to buy $80 worth of, what are we on? Aave, which is a position size of 0.25 Aave coins. We're risking losing $1.60 if we're wrong, and we're going to win $8.89 if we're right. You can see our risk to reward is 5.5. So we want to drop that back down again because we wanted to risk only $1.20 because that's 1% of our account. Bam, place our order. And there we go. Our order is set. We can leave that there if we want. I'll just remove it to keep things a little bit clean. Okay. And there we go. That's done. Our sell order is in. Our stop loss is in. Our take profit is in. Go look at another chart or take the rest of the day off. So that's that one, right? We don't need to do anything there. We know we're going to be risking how much we plan on risking. Let's go to another chart now. I'll just leave that one on. Hopefully we can actually know. What I'll do is I'll close this one and I will just enter one at market just so we can get in and show you how it looks with a position open. Let's find something a little bit juicier. Ooh, this looks like it might be breaking out. Okay, so this looks like it might be breaking out. So we'll just chuck a long on here. It's not really a good entry because it's breaking out, but doesn't matter. We just want to get into a trade, right? So let's just say our stop loss, we'll just go a real tight stop loss and we'll set a take profit up here somewhere. So our take profit is going to be 332.49. Our stop loss is going to be 319.61. Again, we're going to risk $1.20. So we just go up to about $1.20. We know that's roughly our risk. Place order. Now this is a market order. So you can see that entered the trade straight away. It actually took 3 bites at it. So you can see how there's 3 arrows. That means it took 3 entries to get into it. Yeah, literally buying the top, but it's the best way to show you guys examples to get into a trade is you got to hit market. So yeah, there's our take profit. There's our stop loss. We're in a trade because we did a market order. You can see there, market order. And if we scroll down a little bit, you can see here's our current position, BNB. We're long. The position size is 0.3 BNB. The notional size of the actual trade is $97.13. We don't have an estimated liquidation price, current mark price, our current P&L. If you click this little button, boom, pops up a nice little screenshot to share on your socials, show you what you're in, shows you the date and time that you opened, shows you your average buy price and the mark price. It shows you the leverage. This is really cool for a little bit of transparency when it comes to sharing your stuff. Yeah, that's kind of cool. A lot of people will like to share their results. But I think it's cool having the transparency of seeing this. Now, the other cool thing is I might adjust this in a minute just to close a trade, just to show you what happens. But basically, when you do close, when it automatically closes a trade, say it comes up and hits our take profit, that little screenshot that I just showed you, this one here, that'll actually just pop up on the screen like a notification. So you could be busy doing something and that'll just pop up on the screen and say, hey, you just closed that trade and you made however much, whatever percentage it is. Doesn't show dollar value, it only shows percentages. So you don't have to be that transparent if you're not wanting to show those sorts of details. So what I might do is I might just move our take profit right down just to try and get a close. I'll move the stop loss right up as well, just so we can try and sandwich price and get a close, so we can show you how that happens. So yeah, we'll just leave that going for a little bit while price is mucking around, and I will answer any questions while we're waiting. Milan, has there been any questions I need to answer, bro?
I don't think I think you've pretty much got up to date. Yeah.
Okay, cool. Since the whole sub account is used, am I correct in saying you don't need to have only USD in there? All your other holdings count as collateral for that trade, Claire? That's correct. So, sorry. Yeah. So let's say in this scalp account, for whatever reason, like say you don't want to hold USD. I'll give you an example of how you might want to use this. Let's say, for example, you only want to hold Bitcoin, you don't want to hold USD, or maybe you want to hold Australian dollars and you don't want to hold USD. You can have that in your scalp account. You can just have, say, $1,000 in Australian dollars or $1,000 in Bitcoin, and you can still trade these markets without needing to use US dollars. It'll just use your Bitcoin or Australian dollars as collateral to service that contract. Yeah. Jasper, can you be long and short in the same sub account, or do you? No, so you can't be long and short on the same market in the same sub account. But that's the cool thing with the sub accounts, you can be long on one and short on the other. So as an example, right, like on your scalp, you might see on BNB, you might see like a really juicy quick scalp. It might only be a 30-minute, hour-long sort of trade, and you might be just shooting for a little 2% or something like that. So you can be long on BNB on your scalp account, but maybe you are short 5x long-term on BNB on your swing account, right? So you can do that. You can be long on one account or one sub account, short on the other. You can be long on all three if you want. Maybe you've got a long-term hold on one. Maybe you've got a long-term swing trade on another. You might be long day trading another, and then you might be short scalping on another. You can trade that market 4 times with all different sub accounts, all different directions, all different strategies, different leverages. One might be 3x, one might be 10x, one might be 50x. You can get pretty creative there with how you do it. This always happens whenever I'm doing a live trying to explain some stuff. It takes forever to get closes. It's probably the most hard thing to do. It's like they say, never work with babies or animals when you're doing live TV. And it's kind of like, never try and live trade with someone. It's almost impossible. But hopefully we get a little touch soon. Is there a limit on a sub account, Alex? To be honest, man, I don't know. I think on my main account, I think I've set up about 6, 5 maybe. 5 or 6, 5 plus the main account. I don't know if there's a limit on it, man, but to be honest, I don't think hopefully we get a hit here. I don't think you'd need too many. But the cool thing is I think you can have enough. The way I see it, like you'd probably use your main account as your hold account. I'm waiting for this notification thing to pop up to show you. You'd probably use your main account as like your long-term holding account where you sort of keep all your funds. And even like, say for example, say you've got your trading account is $20,000, right? You would probably leave that $20,000 in your main account, but then you might have a sub account that you actually trade on with leverage, say 10x, and you would just transfer, say $1,000 there at a time. All right. So that you're not really accidentally risking more money if you make a mistake or whatever happens. Worst case scenario, something bad can happen, right? But if you, after a month, if that like say you've had a pretty bad month, that $1,000 has turned into say 700, well, you can pull another $300 out of your main account and transfer it across to your sub account. Now you got $1,000 there again. And that might be all you really need to play with at a time. Maybe you've had a good month and your $1,000 has turned into $1,600. Well, you can now transfer that 600 back over to your main account and just get back to your $1,000. So that might be a good way to sort of differentiate there, sort of reallocating funds to different accounts. If you accidentally use cross, well, it's always cross. You can't accidentally use it. Will it chew into other accounts? No, it won't chew into your other accounts. It's completely isolated to the account you're using. Unlike, say, BitMEX, for example, if you use cross leverage, it will basically just chew into your entire holding of Bitcoin. And then when it comes to Binance, same thing. It'll just chew through your entire account of holdings. So you got to be very careful there. There's no way to use cross leverage, but then still isolate into different things. Can you use trailing stops on futures? Stop yelling at me, Callie. You can, but not on the automated trading setup. So this is the this is the automated trading where you can set up your entry, take profit, and stop loss in one. So that's a really cool way to do it. But you've only got the option for market and limit there. If you go back to your basic settings, then yes, you can use trailing stop losses on futures, but it's a separate order, if that makes sense. So let's go, for example, if I wanted to turn this into a trailing stop now, I definitely can, and I'll show you how to do that. So let's go and see where the current price is and where my stop loss is. That's $1.53 below the current price. So what I can do is go, sorry, I've got to change that to trailing stop. And I can change that to $1.53.50. So that's $1.53 below the current price. Excuse me. And how much of a, is it 0.3? Yeah, 0.3 of a position. So what I can do is I can actually delete that stop loss. And then I can put, I'll make that reduce only. Very important to tick that. And now put that in. Now, the only thing I don't like about, sorry, I've got to put a negative value there, minus. The only thing I don't like about the trailing stop loss, it doesn't actually display it on the chart, which is annoying. So you know how we've got our take profit, we got our long, and we used to have that stop loss there, which was really cool. You can move it around, you can see it. With the trailing stop loss, you can't see it. It's there, so we can see our trailing stop, and you can see the trigger price right now is, let me put a quick line in there. Our trailing price right now is 32314 something, 145. So it's about there somewhere. Now, as the price goes up, this number will change, but we can't see it on the chart, which is annoying. That's like one thing I'd love to see them fix. So there's sometimes a little bit of a delay here, but yeah, see how it just changed then. So now that stop loss price has moved up to 32343. Yeah, and that'll keep changing. As long as the price keeps going up, this stop loss will keep going up with it. But it will never come back down. That stop loss it's a one-way street. All right. So yeah, it's a little bit of a delay and it's mucking around a little bit. But yeah, that's probably my only gripe at the moment in terms of functionality with FTX is it's not a big one, but it'd be really cool if the trailing stop loss was actually displayed on the chart. That's a bit annoying, but I'm sure we can deal with it. It's a luxury that we don't have. That's all. Correct. Stop loss will be the same. Stop loss is just exiting the position because we put reduce only. So it's only exiting a position or it'll never enter. So it's yeah, leverage is irrelevant. It's just reducing a position. I knew this would happen. Come on. Milan, go buy some BNB and pump it over the line for us so we can get this notification.
I'm not a whale, mate.
You sure? I've seen that. I've seen the houses you're looking at, bro. Oh, so close. Oh, there we go. Bam. So there we go. So you just got the notification on your screen. We made 5.52%. We can go share that straight to our socials if you've connected it. Oh shit, I think I accidentally just did that. Oh, you can tweet it, whatever. So yeah, you can do that and share it around, which is pretty cool. Now we can go back to our scalp up here. We can go check out our P&L. You can see there we just made 40 cents. That's pretty cool. But yeah, as you trade, that'll sort of go up. Yeah. Can you isolate each trade on FTX, Blair? No, you can't. You can't isolate each trade. But I'll give you some examples, right? And this, I dare say, I'll ask a couple of people. I'll probably ask Reese here because I know Reese is a professional full-time trader, so he probably has some strategies here. Most traders very rarely will have many more than say 4 to 5 trades on at a time. Now, this comes for a few reasons. If they're using a risk management strategy of say 1%, and you've got 4 or 5, say 5 trades on, well, that means you're essentially got 5% risk on the table right now in the market. Most professional traders will have some sort of a limit to how much risk they'll have on the table at all time. Just because you've got say $10,000 and you're using 1% risk, that doesn't mean you can go and put 100 trades on at a time and you're safe because it's all 1% risk, even though it'll probably balance out in some degree. Most traders will only ever have 4 to 5 trades on at a time using a 1% risk, so that they've only got 5% exposure to the market at all times. So if that was the case, if you're sort of down that road of only ever being in say 5 trades, or maybe just where you are with your trading, you're only ever in 3 trades at a time, well, you can create 3 separate sub accounts and put however much money you need to put in each 3 sub accounts, and just call it 1, 2, and 3, or trade 1, trade 2, trade 3, and just do it that way. Maybe you enter 5 or 6 trades, where you could probably create 6 different accounts and call it trade 1, trade 2, 3, 4, 5, 6. And you can do it that way. So you can still isolate a single trade that way. And that way you can sort of mix the leverage per trade that you're doing. So say, for example, you like this one, but you want to enter it on higher leverage. Well, you can do it on that trade. If you're the kind of person who sometimes has, I don't know, 12 trades on at a time, then yeah, it could start to get a bit messy, especially creating that many accounts. Because the issue there is when I'm on scalp, I can only see open positions. Sorry, I can only see open positions on my scalp account. I can't see open positions on my hold account or anything like that. So if you had say 12 positions open, you'd actually have to flick through each one to look at all your different positions. And that could get really, time consuming, messy, probably not a really good way to manage your trading. Whereas if you have, say, 12 trades on the one account, you're going to be able to see all your positions here, and you're going to see all the P&L, and you're going to know where everything's at. So that's a little bit more organized. So I think maybe the option of separating each individual trade into a separate account, it could get messy, but it's doable. Actually, I will just check, because I think if you go to wallet, if you go to all wallet account, no, it only does that, bugger. Because so here where you check your balances and stuff like that, you can actually check your positions here and you can see what's open, but that's only for each account. Again, unfortunately, you can't go all. You can view all account balances, but you can't see all account open positions. So that's a bit shit. So yeah, look, it's doable. I just think it'll be messy. I wouldn't recommend it. It's really going to be up to you. But like, again, maybe this platform doesn't really suit the style that you do. And maybe that's where Binance steps in and fills that gap for you. The fact that you can enter multiple trades and see all your positions in one, that might be the deal breaker for you. I'm not trying to swing people across to either. I think both platforms are great. Both have pros and cons. I even still love BitMEX, but there's pros and cons for each, and they suit different people. They suit different markets, different trading styles. So it's each to their own. This is just another option. If you're not happy with Binance, there's another option there for you. Now there is some other quick things I was going to go through. Volume monitor. We went through this the other week. You can actually check to see the amount of volume and liquidity that's being reported on different exchanges, and get a realistic idea of the derivative platforms as well, and see who's actually trading the most volume. Now, I got into this a couple of weeks ago when we were talking about it, because FTX, it's not that high. I mean, it's high. It's a lot of money. $6 billion is it's still a bit of coin, right? But compared to say Binance, for example, 56 billion, like that's a big difference, right? That's a huge amount of money. That's essentially almost 10x the amount of volume on Binance. So that's a good sign of liquidity, right? Binance has a shit ton of liquidity compared to FTX. However, you've also got to consider how many markets Binance has. So if you think of the derivative exchanges that FTX is reporting, they're looking at, say, I'm going to say 30 or 40 different markets, as in 30 or 40 different coins. When you look at Binance, you've got like 400 or however many variations they have. So even though it has a lot more volume, there's also a lot more different markets you can trade. So I guess if you compare some sort of a comparison or ratio to see how many markets compared to each other with volume, they wouldn't actually be too far off. I'd still dare say Binance has it. Like Binance definitely has more volume than any other exchange. But if you look at this comparison and go, Jesus, it's 10x difference. Just keep in mind the amount of actual markets that can be traded on there. And the other thing to pay attention to is your liquidity score as well. This is a big identification of the depths of the books. And FTX is actually rated just as high as Binance when it comes to a liquidity score as well. So depth of books and volumes is still high, very high. In fact, during very volatile market conditions, it's always known that BitMEX shits itself. Binance has a really bad habit of, going into a fritz and locking everyone out and stopping them out of positions, which is really terrible. FTX has not had that issue during those high volatile conditions when everyone's like, oh, I can't log into Binance and oh, my position's been liquidated and it skipped my stop loss and all that sort of stuff. FTX didn't have that issue. So that was like a really big bonus for me. I really like that. Yeah, most exchanges have an insurance fund, man. So the way the insurance funds work is with liquidations and fees and stop losses and the little spreads and things like that. Liquidation engines have a little bit of a buffer to avoid the exchange losing money and avoid the lenders losing money. Oh, I don't know why that popped up. And those little crumbs of money ends up going to the insurance fund. And that just builds up to avoid any issues where there may be a liquidity issue and they have to do clawbacks, or if they have to dip into the fund to pay out lenders because of an issue, then it comes out of that insurance fund. There's no issue there. If you're talking about, do FTX insure their assets? I don't think any exchange does that. I'll have to look into it. I know Binance is always crapping on about your funds are SAFU, or, I know he made a spelling mistake and it just became a meme. I think a lot of people don't understand that very well either. They don't insure your assets. So there's a completely different thing there. They do have an insurance fund, but I mean, if Binance went down tomorrow and everyone lost all their coins, like they got hacked, I can guarantee you're not going to get a payout if that's what you're thinking. And that goes for all exchanges. Like, you're not going to get a payout. That doesn't work like that. Their insurance funds are there to insure liquidity providers who are lending liquidity to the platform. So yeah, just keep that in mind. That's sort of across the board. So that's a volume monitor thing. That's pretty handy to look at. It's not something you'd check every day, but it is handy to know. Quant Zone is really cool. I'm not going to go into this today because it's probably a bit over most people's head, but this is where you can actually do quantitative trading and actually program bots with coding and stuff like that to actually do different things. To give an example of how you could use this, because I played around with one recently where you can actually set up like dollar cost averaging scenarios with things like this. You can actually say every time Bitcoin is below X price, you can purchase $100 worth of Bitcoin with a USD. Every time Bitcoin has a spike down of 10%, buy some Bitcoin. If it has a spike up, sell some Bitcoin. Like, you can get pretty funky with your programming. That's pretty cool. But then you can use it as quantitative trading as well, with separate conditions for RSI and MACD and moving averages. If moving average is above this price, then do this or look for that trade or whatever. So you can do some pretty cool funky stuff there. So that's really cool. So essentially you can program your own bots, which is amazing. Now the advanced trading, I played around with this recently. I don't really see much use to it, but you can sort of create like stuff that you would normally trade. Say if you're the kind of person who only ever trades Bitcoin, and maybe you only ever trade Ethereum, like you only ever trade 2 markets, you can actually program this screen to just have those on here. Now it's been a little while since I've done it, so let me just see. Add a new window, add a new symbol. So you can add a new symbol, and let's just go. I don't know. Let's say you want to trade comp perp, like that. What is symbol 2? That should be right. USDT, something like that. Add another symbol. Let's add, say, I don't know what half of these things are. Give me a sell token. There we go, something like that. Now you should have drop-down menu where you can actually, I'll just get this back out of the way. So you can actually just quickly flip between those few markets that you always trade. So it just makes it a little bit easier. You can have tabs here to flick through your order books. You got your sub count selection if you want to do that. And you can even have like preset stuff that you always do. So you can get pretty funky there with your pre-programming of specific markets you trade, rather than say happen to come to your normal trades section like this and then have to, like, I just make favorites. I've just got a favorites list. I find that easy. When you click on this one, you're only going to see all the Bitcoin contracts that you've got. Otherwise, you've got like subcategories here for these ones. Otherwise, you have to go back to futures and then scroll through and find the one you want, or you can search it, or you can click this button and then you've got everything there. There's a lot there to get through. I'm not a big fan of that. So yeah, there's a few other cool things here. They do have competitions and rewards and stuff like that every now and then. I haven't really played around with them. They're generally a volume based thing. The more trading volume you get, the more you get. Yeah. Yeah, Nick. I think I posted it earlier. Let me just see. Whoops. Yep, there we go. So that code there, Nick, you'll get a discount on your trading fees if you use that. Sorry, just quickly reading through some of these. It looks like Reese has answered most of that. Do I have to transfer everything back to my spot wallet in Binance before I can send it to FTX? Do you have to transfer more? I might need a little bit more information there. Look, I'm not suggesting you just quickly transfer everything over to FTX. By all means, check it out, have a play, transfer a little bit of money there, see if you like it. If it's something you prefer, then maybe you might like to move all your stuff across. But I mean, like, as an example, if you've got a whole heap of different coins on Binance and you're happy just leaving them there for now, leave them there. You don't have to transfer it across to FTX by any means. But say if you wanted to trade some, and say you had $5,000 worth of USDT and you wanted to trade that, then yeah, you can shift that across to FTX and start trading like that. But you don't necessarily have to move all your holding coins across. I mean, you can keep them in offline cold wallets or whatever you want. You definitely don't have to move them to FTX at all. So yeah, there's that. So one other cool feature that I forgot to mention when it comes to holding FTT tokens. So if we go back to our wallet, not that I've got any FTT tokens in here, but when it comes to withdrawing, so you know how Binance and BitMEX and all that sort of stuff, they put a little bit of tax, they put a little bit of cream on top when it comes to transferring funds out. They charge you some, like BitMEX, for example, charges an astronomical amount. I've paid like $110 to transfer money out of just as a fee to transfer money out of BitMEX before. And I know Ethereum was clogged up for a while and a lot of people were paying pretty high fees there with Ethereum contracts as well. But yeah, Binance and pretty much every exchange will charge you a fee on top to transfer your money around, because you're not really using a wallet. You're actually using Binance's system, and you're paying them to do their work for you. So it's fair that they charge you a fee because they're doing something for you, providing a service. The cool thing is with holding FTT tokens, I think you get like 5 free transfers a day. So it might be more, 8. I can't remember, 3. I don't know what it is. You'll be able to find that information. I'll try and find that. It'll go into the tutorial that I'm making. But if you're holding, I can't remember, say 5 or 25 FTT tokens, you'll get X amount of free transfers a day. So it actually doesn't cost you any money to withdraw out of FTX. So quite often, like I'll send, if I've made a bit of money and I want to take some off the exchange and send it to either crypto.com or Celsius to earn interest on, it doesn't cost me anything to withdraw. So you can send, a couple of grand's worth of Ethereum and you won't pay any transaction fees. Or just send it straight across. So that's another cool feature I really like of FTX. Just another one of those little positives that, tick more of those boxes for me as to why I decided to change. Stefan, yes, you can. You can open up a corporate account. Does it have your favorites list with 24-hour volume and percentage gained on screen like Binance? So I think that might be this what you're talking about. So if I press that button there, then you've got your favorites, whichever favorites you choose to have. And then you've got your volume, 24-hour volume and stuff like that there, daily change. I'm assuming that's what you were talking about. Lindley? Yep. So that's there. That's just that little, this one here. So you can either just like go here and you got all your favorites, just a quick go-to tab. There's your FTT market, so on and so forth. Or if you click that one, you've got your list there and you can see those. If you just click futures, then you're going to see all of them. If you don't really have a favorites list and maybe you just want to say go highest volume, or maybe you want to go daily change, you can swap that to whichever's moved the highest. And then you got your spot markets as well. So yeah, you've got a few options there. I don't know what else there is. Oh yeah, you got your stocks and stuff as well if you want to look at that. But for me, like I'm not much of I don't like to scour the whole market for opportunities. I just like to look for opportunities within the range of stuff that I like to trade. I find that a lot easier. So I just make a favorites list, and you'll probably find that my favorites list is pretty much just all the highest volume stuff. So if I go to futures, and we go to, it's already on highest volume. So you see all my favorites are pretty much, there's a couple there that are slightly higher volume. You can see some of the ones that I have in my favorites are actually dropped in volume compared to some of the others, but all the stuff that I trade is high volume markets. But yeah, you might really enjoy trading Filecoin or SXP, whatever algo might be your jam. So you favorite whatever you want. That's just how I do it. But yeah. We were trading all perpetual contracts before. You do actually have quarterly contracts as well. Sorry. Yeah. So you've got some derivatives of commodities. So you've got lumber futures, which is pretty cool. But you've got your quarterly contracts and stuff like that as well. There, September, get rid of the December ones. So you've got futures contracts, which don't have the funding fees every 8 hours. And then you've got your perpetual contracts, which has your funding fees. I think this is a really big confusion when it comes to Binance as well, because they call it futures, which is essentially FTX do the same thing. They call it futures because they're all futures markets, but there's a big difference between futures markets and perpetual contracts or perpetual swaps. Perpetual swaps is like an ongoing contract, and that's where you've got that 8-hour funding fee they have to pay an interest, or the lenders and borrowers have to pay an interest to keep the market price where it is to remain liquid, and stop it from flipping from one side to the other. So because of that, you get charges interest fee every 8 hours, and that can really blow out if you're in a position for a long period of time that doesn't really go anywhere and there's not a lot of profit. You'll end up paying a lot of extra fees. If you are more of a long-term swing trader when it comes to trading futures, then you want to actually trade quarterly contract futures, because then you don't pay funding fees. You pay your fee to get in, or if you're using market maker orders and you're holding FTT, you won't pay any fees to get in. You won't pay any fees to get out. The only time you'll pay an extra fee is if you hold your contract all the way to the end date. In this case, it'll be September, whatever date it is, the 24th. On the 24th of September, bam, you will pay an extra settling fee there, which isn't much, but it's an extra fee that you wouldn't have to pay if you just closed out of the position earlier, which most people do anyway. But futures is more for speculation, so the price doesn't really track mark price as well. It does, but not to the dollar. Yep. Jason, too easy. Oh, that's something we didn't look at. Sorry, I'll go back to our futures screen. Get rid of that. And I'll just go back to, say, Sushi Swap. I didn't take notice of the liquidation point. So we'll just, I'll go to chuck on another trade here. Let's say we're going to go long. Doesn't matter what the price is here. Let's just put in, say, $10, and we'll put in a stop loss of $8.80. Actually, I'll just change this to so it stops moving around. So now when we go to move our risk around, right? So let's, what have we got? $120. So say if you wanted to use 2% risk, well, you know 2% is $2.40. Yeah, jeez, I had to think about that for a second. So you just go down until it says $2.40, $2.50, whatever. So that's quick and easy, right? Now, in this situation, with the stop loss and stuff like that, there's no chance of liquidation. But if I move it up a little bit and try and get it to actually give me an estimated liquidation price, might actually need to change the size of my stop loss because it's not even going to liquidate me. Let's go down to say 5. Surely that's going to give me a liquidation price. Has to. It's going to make a liar of me now. Why not? Doesn't want to show it. Normally it'll come up with a liquidation price here or an estimated liquidation price. And it will say it down here as well. So estimated liquidation price, when you're in a position, it'll tell you what your estimated liquidation price is as well. So you will see that if you don't know what it is, you'll be able to find it. So Jay, with quant trading, can you program a bot to buy and sell for you when the market or indicators meet conditions? Yes, you can. Obviously, you need to know how to program. That's quite a lot of the way that I trade, which is quantitative trading using specific, not necessarily indicators. I mean, you can use some indicators. It's more so market conditions that I program on a discretionary level. But yeah, as an idea or an example. Let's just say let's just chuck on an indicator like MACD. Whoops. And then maybe even, let's just go moving average like that. Okay, so what moving average have we got there? We've got a 9. Let's just change this color. We'll make it a 50 and I'll change the color so you guys can see it a little bit better. All right, so now we've got our moving average and we've got our MACD. So what you can do when it comes to coding on quantitative levels, what you can actually do is, you can have a specific setting on how to buy and how to sell, as long as it meets specific conditions. So one of the conditions could be price needs to be, why does it keep referring back to white? Price needs to be above the 50 EMA. Well, right now it's above the 50 EMA, so that ticks that box. So now it's sort of getting ready. The next thing you might want to have is it has to be not necessarily an EMA cross, but the MACD line has to be above the signal line, which it isn't at the moment. So that's a cross. Histogram needs to be in the positive. So that's a tick. Volume needs to be increasing. That's a low. The last 3 candles need to be bullish. Oh, sorry, I'm running out of screen now. The last 3 candles need to be bullish. That's a no, so it won't enter this trade. But if all of a sudden it ticks all those boxes, so let's say, for example, after a couple of candles, we've got bullish action, say the volume starts to increase, then all of a sudden this ticks that box, and then say after a couple more candles, the MACD line is above the signal line. Now all of a sudden we've ticked this box, bam, it enters the trade for you. So yeah, that's sort of how you would go with quantitative trading. You can have specific conditions to make it somewhat discretionary, but automated, so you don't have to be in front of the computer. So if you think of like a trade plan where you have specific steps of your trade plan, like it must be doing this, you must have 3 touches within a wedge, must be above support, it must be above EMA, your RSI must be above 50. You might have all those sort of conditions before you actually enter a trade based on what you see. That's sort of the same thing. You'll just have a whole bunch of specific criteria or conditions to meet before it actually enters a trade. Paul, I'll be doing some stuff on it in the not too distant future. It's pretty hard. It's pretty in-depth. There's a lot to learn. Like, you more or less have to learn how to code, regardless of trading style. So there's like, you need to know how to trade. So you got to know how to build a good plan and a good strategy. And then you need to learn how to code. And then the other issue is sometimes conditions change and certain strategies like that might not work, which is why I use like higher time frame windows for the bots to actually work. So what that means is a bot might work really good in an uptrend when the market's trending upwards, but when the market turns sideways or trends down, it doesn't work. So I can create a trade window where just something really, really basic, like say the 100-day moving average needs to be in an uptrend, pointing on a specific angle, so on and so forth. Then it will activate the bot based on its conditions. But if the market conditions change and all of a sudden the price is below that daily EMA, now that window's gone and that bot won't turn itself back on. So you can get pretty funky with it. It is really cool, but so it's not like a copy someone's bot and turn it on and it works. That'll get yourself in trouble. You have to know how to build strategies. You have to know how to code. You have to know how to monitor it. There's a lot to it. I do plan on doing a lot on it. Paul, yes, you can do it. There's, in here, you go to Quant Zone and you can start programming different rules and strategies and stuff in here. I do plan on teaching you guys. It'll most likely be an extra course that we do. And it's not going to be for everyone. We're not going to try and teach it to all the students because it's over the head for most people. And if people are trying to jump ahead and go, oh, look, I still don't get my head around how to buy and sell, I'm going to try and build a bot. It's like, nah, you've jumped the gun and it's not going to work for you. You really need to know what you're doing first. So it's not something I just suggest you do because you think it's going to be a magic pill. It's not going to work like that. So yeah, that's why we haven't really produced anything just yet. Can't even make a $5 profit on Binance. Fees will pretty much zero, get you negative. I've heard this. I've signed up since starting with a $100 account. They're actually losing money when it hits a take profit. Doesn't sound right, Ed. Yeah, that doesn't sound right because, yeah, as Reece said, the fees, that's like one of the beauties of crypto is the fees are based on a percentage of the trade. So when we trade a lot of other markets, there's like lot sizes, like minimum lot sizes, which are quite high. And the fees are just like a standard fee. And then they scale up with our lot size. So to give you an idea, like say trading on the ASX, you might have a $500 lot size with a $20 buy fee, $20 sell fee. And then if you're buying larger lot sizes, I think when it gets up to about $20,000 lot size, you start paying another fee on top of that. So like fees get out of control when it comes to other markets. Crypto, even though it can get out of control as you scale up to very large orders, the beauty is for somebody who's learning, the smaller size positions, the fees are minimal, like cents. So the only reason I would say somebody is losing on very small trades to fees, I dare say they're probably using a lot of leverage because you got to remember your fees are based on your position size. And if you're using a lot of leverage and then trying to make it up and multiply how much money you're making, then you're probably using a very large position size to make up that order. So I'll give you an example. I'll go back to a chart so I can do a little scribble. It's kind of what I use as my whiteboard these days. So let's say if your position size, why does that keep reverting back to white? That's annoying. What I need to do, I'll just quickly, damn, can't save that. Okay, so let's just say your position size is $100 and you're on 10x leverage. And that means you're supplying $10 for this trade in order for it to go wherever it's going to go. And say you're going to pay not 1%, you might pay a 0.1% fee. Oh, God, I stuffed that up, didn't I? You might pay a 0.1% fee of that $100, right? So you're going to pay, what's that, 10 cents. You're going to pay 10-cent fee. However, so this is how some people, they just get leverage really wrong. and they think it's a multiplier instead of divider. Leverage is a divider, not a multiplier. So if people are using $10 risk, but then they're using 100x leverage, that actually means they're buying $1,000 position. So 0.1% of $1,000 is now $1. So they're actually paying $1 fee to get in, $1 fee to get out. So even though they're placing these little $10 trades, they're actually, they're paying a fair bit in fees. And that's to get in and then to get out. And then, so that's $2 per trade at $10, thinking that they're just doing these little $10 trades. They're paying $2 in fees every time they get in and get out. And then if you lose, say you lose $5 or something, then essentially that trade, plus another $5, that trade just costs you $7. And it doesn't, if you're starting with $100 and you're doing those sorts of things, it doesn't take you long to chew through $100 if every trade's costing you $7 because you're doing something silly. So just pay attention that your fees are based off the position size, and the higher leverage you use, if you're not using leverage correctly, the higher leverage you use, the bigger your position size, which means the bigger that fee. So yeah, just keep that in mind. Leverage is supposed to be used as a divider to reduce the amount of capital you need to actually place the trade. It's not a multiplier to make more money using less capital. It's to make the same amount of money using less capital. That's probably the easiest way to say it. So like, let's say if you had $100 in your account and you wanted to place a trade on spot, but it's going to actually cost you $100 to place this trade. That means you're going to have to deploy your entire capital on that trade, which means you've now got $0 in your bank account and you can't go place another trade. You've got to wait for this trade to play out in order to then go and place another trade. You're screwed. That's 100% deployed capital there, which is no good. Now with leverage, say on 10x, for example, well, that means to place this exact same trade that was going to be worth $100 trade, you actually only have to deploy $10 to make up that trade, because you're leveraging your money, dividing the amount of capital needed to make up that position, which means you've still got $90 sitting in your account, which means you can go place another couple of trades. So that's the whole reason of leverage. Leverage isn't designed to multiply wins. It's designed to reduce the amount of capital needed to keep trading. A lot of people use it as a multiplier, and that's where people are gambling, and that's where people go wrong. And that's where they lose a lot of money, because they're just increasing their risk. So yeah, just keep that in mind. If you're using leverage correctly, there is absolutely no reason that it's an issue, and your fees will be small. Can you have a personal account and a corporate account, Donnie? I believe so. Yes, you can. You can have two. Is that? Is it mobile friendly? Yes, it is mobile friendly. There's a few features you can't get on the mobile. I'll just give you a quick example, because I do a lot of it on my mobile phone these days. I used to be very anti-mobile trading. I'll generally do all my setups and stuff on the computer, but I'll monitor trades on my mobile all the time, and I can close and do all that sort of stuff. So that's really cool. So to give you an idea of what you can't do, I don't think there's much you can't do on the mobile phone. You can still set up all your trades. So you get, much like Binance, you're going to get a chart. You're going to get your order book. You're going to get your ability to put your trades in. You're going to see your positions. You can switch between your different wallets. Okay, so that's what's missing. When you go to the trade function, there's not an easy button to press to flick between your different sub accounts. You actually have to click back to user, then choose the account, choose your scalp account, then go back to the trade tab and then trade on that account. So it's a little bit of a pain, but it's not that big of a deal. You can't deposit via the app? Are you sure? To be honest, I don't know if I've actually tried, but I didn't think that was an issue. Let me just have a quick look. So wallets, main account, so Bitcoin. You're right, it doesn't have the feature there to Hang on, deposit. No, you can. Yeah, you can. You can definitely deposit on your mobile phone. When you click on the coin, it doesn't have the deposit option, but above it, you've got 6 big buttons: stake, convert, borrow, deposit, withdraw, sub account, transfer. If you click the deposit button, it'll give you the coin that you want to choose, and then it will come out with your wallet. So you can definitely do that on your mobile phone. On a leverage trade when I've moved. So Blair, so that's the only thing that I mentioned before that you have to be weary of. So if you set your trade up before, like I showed you, and let's just say we're going to take profit at 50,000, wishful thinking, stop loss at 32, and we've done something like that, and we can see how much we're going to win, how much we're going to lose in our risk to reward. If you then go and modify it, you can't really know because you've just gone and mucked around with it. But I mean, that goes for anything really. If you go and muck around with your trade, you're not going to know. It's not going to be the exact same thing as the last setup. So it's almost impossible to know. I mean, you could sit there and work it out yourself. So as an example, I'll show you how we can get away with it. Let's just go to ADA and we're going to enter market. We're going to do a take profit of say, $1.60, a stop loss of $1.32, and we're going to enter this trade with say something like that. So we can see our current risk to reward is 1.95, and what I probably should have done is I should have done this to begin with. So what did we do? 1.6. Oh shit, it's way up here. So 1.6, and my stop loss is 1.32. Oh, that's way down there. Something like that, right? So you can see that's pretty much my current order. You can see risk to reward. So I'll place this trade, get into it, and then we'll have a muck around with it. So I'll leave that there for now. But now let's say if we go and move our stop loss up like that, it's going to ask us to confirm. Let it load. Now we can just do that, and now we can see what our risk to reward is. So that's easy enough to work out your risk to reward. And same if I go and move it lower. So if I go and move my stop loss lower, I can then just grab that and work out my risk to reward. So it now changes to 1.6. So that's easy enough to do. If you want to work out how much you're going to be losing, that's when you're going to have to pull out the calculator and work that out, because obviously you're going to have to go your stop loss, which is 8%. And then work out what the actual position size was and work it out from there. So it's a little bit more mucking around, but it is doable. Now, I'll just quickly show you how you can actually market close. So I didn't show you this before. So let's say we didn't like this trade and I want to get out of it. If you just press market close, yes, it will boom, and it will just pop up and show you what you did. We just got out of that trade. Now those orders stay there, but they are reduce only. So if they get hit, they'll just cancel out. That's one of the things I don't really like about FTX is they don't cancel out those orders because it doesn't group those orders into a specific function. It leaves them in there, which can be a pain in the ass later on if you need to do a different trade. You got to go in there and delete them yourself. But I understand why they leave them. It's just a little bit annoying for me. So yeah, Blair, I can't remember who asked it now. Yeah, it was Blair. Same thing. If you were going to do a limit order, you'd just move your entry price around, try and figure out what your risk to reward is. And then again, you'll have to do some math to work out how much you're going to lose, but easy enough to do. Yeah. Is it US friendly? So I think with the US, there is always going to be issues with leverage trading. So I think the only way to get around that is using VPNs or something like that. Yeah. From what I understand, US doesn't allow its citizens to leverage trade without a license. And then when it comes to a lot of these exchanges, they don't want to have to go through all the regulations and jump through all the hoops in order to get the licensing and stuff like that. So they just don't bother. They just don't offer it to US citizens. But yeah, if you use a VN, you can get around it. Plenty of people do it. Claire, so you can deposit fiat like straight from your bank account, but you need to do a level 2 KYC. So when it comes to fiat on ramp, off ramp, There is no way to do it without doing complete KYC, which is, license, passport, phone number, address, all that sort of stuff. So as long as you're happy to do all that stuff, that's the only way you can do any sort of fiat on-ramp, off-ramp, where you can directly transfer money to and from the exchange, much like Binance. So if you just do like your level 1 KYC, you won't be able to transfer fiat. You can still transfer US dollars, USDT, and all that sort of stuff. Yeah. Yeah. Do I exit by the leverage amount? Do I times it by the leverage amount? Blair, are you talking about how to work out the amount of money you're going to be risking? It's a little bit hard to reverse engineer it. Risk to reward's easy enough. As I just showed you, can just put that tool on and move it around. But to reverse engineer how much money you're going to be risking, that's a little bit harder to do. Could definitely do it. I could try and work it out for you now. Because the way we do it is we go whatever our 1% risk is. So if you've worked out that $10 is your risk, or 1% risk, we're going to divide that by the stop loss size. So let's say if your stop loss is 3.5%, like that, then this is going to tell us our position size. So let me just quickly bring up a calculator here. So if I go $10 divided by 3.5%, that's going to tell us what our position size is, which is $285 and whatever. We'll just leave it at $285. So basically, if you entered a position with a $285 position size and your stop loss was 3.5%, when you get stopped out, you will lose $10. If you want to reverse that, you can type in 285 minus 3.5%, and you can see it roughly $10 because I didn't put all the decimals on it. So that's how you work out your position size. But then to reverse it, if we know we've got a position size of 285, all right, so we know we've got a position of 285 because you've already entered the position, but we've just moved our stop loss, and our stop loss is now 5.2 or something like that. We can go minus 5.2 equals, let me go 285 minus 5.2%. We can see it's $14. So we're now risking $14. So it's pretty easy to sort of work out how much you're going to risk there. It's not that big of a deal. Yeah, so just keep that in mind. Yep. Yeah, that should be about it, Blair. That'll easy enough to work out. The leverage doesn't really come into it because you're basing it off position size. The leverage is irrelevant. The only issue there when it comes to leverage is working out your P&L based off your margin, because your margin is going to be a lot less than the actual position size. So your P&L is going to be a lot higher than it actually should be. For example, if you're on 10X, say this asset you bought, whatever it is, it moves up 10%, right? Technically, if you bought $285 of this asset, you would have made $28.50, which is 10%, right? But if you use 10X leverage, you wouldn't have actually had to use $285. You would have actually only had to use $28.50, right? But if it moved 10% on 10X leverage times 10X leverage, then technically your P&L would have been plus 100%, right? Because it's 10X time, or 10 times 10% is 100, and you've only used $28.50 as margin. So it's saying you made 100% on your margin, and technically you did. You made $28.50 and you only put $28.50 in. So you just had 100% P&L on the money that you put in the trade. However, it's no different than just buying it on spot and the price going up 10%, making $28.50. So you didn't really make 100%. You made 100% on the capital deployed, but you didn't really make 100% on the actual trade, because the trade only went up 10%. So yeah, that's something to think about when it comes to putting in your journal. The percentage that you see on your P&L, that's based off your capital deployed for margin, not how much money you made. That's completely irrelevant. So always best to just focus on risk to reward there. Whatever your risk is, the X amount of dollars that your risk is, or 1% risk is, and then focus on your risk to reward. Doesn't matter how much the trade moves, doesn't matter how much leverage you're using. What matters is the risk to reward and how much risk you actually used. It took you 6 months and now you understand it with what I just said then. I'm glad it tweaked for you. And that just goes to show how being committed to trading and sticking with it, eventually things start to click and you're just like, ah, shit, I get it now. How obvious was that? It happens all the time. You'll probably have another 10 of those moments this year, where things will just click and you'll be like, ha, I'm an idiot. That's what that means. Yep. Cool. All right, guys, if we got no more questions, I want to wrap it up there. Hopefully I'm pretty sure we covered everything. Explain reduce only. So yeah, reduce only. I'm sure you guys understand that. So you've got the option to reduce only or not. But yeah, hopefully that was good. Complete run through. You guys know how to use it. You can see it pretty damn easy. Actually, before I go, because this is what I was doing with one of my students the other day, I want to show you how quickly and easy it is to trade on FTX. Yeah, because I don't know how everyone else is, but sometimes you log into Binance and then, or whatever exchange you're using, and then you got to click on this, and then you got to check that, and you got to do your TA, and it could be half an hour before you actually enter a trade, and then you're still not even sure what's going on, whether or not it's actually entered. So what I want to do is just quickly show you how quick and easy it is to set up a trade, walk away, and get on with your day. So we're gonna have a quick look at comp right now. We already know our risk is $1.20, and we want to go long here. So this is pretty much the process that you would go through to placing a trade. We've got a downtrend. We've got a little breakout here. It's sitting on a level. Cool. We're going to go long. I want to scalp a little long here. Take profit around here. Stop loss just below this structure here. Here's all my numbers. Go and put them in. So our entry point is 476.67. Our take profit is 525.66. Our stop loss is 458.81. I'm risking $1.20. Bam, place order and go and make yourself a cup of coffee. That's it. Done. Don't need to do anything else. That is completely done. You're either gonna win or you're not. So you can see there that probably took about 12 and a half seconds to place a trade, and that is completely automated. You are nice and safe, no risk. Sorry, you've got risk, but you've got no risk of losing any more than that. And away you go. I entered it wrong. What did I enter wrong? Oh, I didn't delete the entry first. Oh, my bad. I went like that and I didn't delete it. Well, it market entered the trade. We're good. So yeah, okay, that's a lesson there. Make sure you delete the price there before you enter it. Obviously, I added on the end of it there. I added that on the end of it, and it essentially just entered at market. Rookie error. Maybe it takes 14 seconds to place a trade. you gotta have another look. But yeah, nice and easy. No need to muck around. No need to transfer things around and figure out where it is. It's just bam, smash it in. Go to the next one. Let's have a look at Link. What's Link doing? Bit of resistance. Cool. We're going to sell Link this time. I'll just enter at market so we avoid being an idiot again. Stop loss. Take profit. Our take profit is $19.1755. Our stop loss is $20 for 20. We're going to risk $1.20. Boop, 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 boop. Something like that. Bam. Let's go. Next one. Let's go to SNX. Oh, we're just about down on support, but we are breaking a bit of a trend line. Maybe not. I didn't draw that trend line properly at all. That looks pretty good, right? We're coming down onto this. We could bounce here. So this time I'm actually going to set up a limit order. So we're going to go limit and do it right this time. And we're going to set up, try and get a real nice juicy buy here. Stop loss, just want to go below that structure there. Take profit, $12.23. Stop loss is $23.105. We're going to go $1.20. Let's just go $1.40. We're cool with that. Bam, done. Next, let's go Sol. Nothing there. Sushi. Don't like that. XRP. Don't like that. Let's go back to BTC. Fuck, it's about the same. ETH. ETH looks like it's doing a bit of a squeeze. Let's preempt the breakout, right? Probably won't work, but just for the sake of, for the sake of chucking a bunch of trades on, let's just preempt the breakout. Say it's going up here somewhere. Stop loss like this. So again, we're going to do, now we'll just enter at market, take profit, 2430.9. Our stop loss is 2274.1. We're going to risk, maybe we're really confident we're going to risk 2% on this. So $2.40, bam, place the order. And we just placed, you can see our positions here. We're currently in profit on all of them. We just placed 4 trades. So we placed 4 trades opened, but then I think there is one more that hasn't opened. What did we enter? SNX, Link, ETH, Comp. Oh, no, they all entered. My bad. So we entered them all at market, more or less. So yeah, we just entered 4 trades, and that took what, maybe like a minute. Obviously, I just rushed it, but it just shows you how easy or quickly it is to just utilize the functions of this platform. Move on. Now I can monitor it on my phone. Can just keep an eye on it and see how I go. You can come in here and market close them. You can take a screenshot and see how shit that was and whatever. It's a shame that field won't populate by moving your stop loss profit bars on the main screen. Yeah, Jason, I agree. It'd be good, but it goes based off what you got here. So I guess you probably could figure it out if you went and, so who's that, Jason? So let's just say, for example, if you want to try and work out by moving a few things around, let's just do it. Let's just move, say that, we'll agree with that, and we'll move our take profit down a little bit. Essentially what you could do if you want to come in and check to work it out exactly, you could pretty much come in here and type in all the things that you did. So our entry was 227. We've moved our take profit now to be 2407.3. I know there's a bit of a roundabout way of doing it, but this is how you could do it without trying to do a whole heap of math. And then our position is 0.058. So you can see here, that's how much we're going to lose. That's how much we're going to make. So change it to a 1.3 to 1 risk reward. Our stop loss, our potential loss is now $3.68, and our potential profit is $4.91. And now if we just go and move that back up to something completely different again, all we're going to do is type in these numbers, 2453.7, and our stop loss is now 2288.1. So now you can see we're going to risk losing $2, potential win of $7.60, and we're now at a 3.8 to 1 risk reward. So yeah, there's ways you can do it easy enough to get the information that you want, rather than having to try and use calculators and work it all out. So easy enough. It'd be, like you said, it'd be good if it just repopulated it for you and told you. It'd be good if this screen showed you, but unfortunately it doesn't. Yeah, just a bit of a shame. Claire, so that squeeze, this one here. Yeah, this could go up or down. A squeeze like this, symmetrical triangle without really a trend, because essentially we're stuck in a bit of a range. Could go up, could go down. We don't know. I just entered long just for the sake of it, just to chuck a trade on. But yeah, it could go either way. Yeah. All right, guys. Cool. Hope you guys enjoyed that. Just quickly close all these. Yep, cool. I don't like leaving trades on when I've just been mucking around, even though it was only a couple of bucks. Hopefully you guys enjoyed that. I will be putting together a proper tutorial that'll go in the back office. It'll run through everything start to finish. And then I've got a big written tutorial that's coming out on my website as well that I'll let you guys know about. Yes, I am in Melbourne, mate. Yep. But yeah, what we just did today, this will go into the back office anyway. So you guys will be able to see that. And the new back office, I believe, is up. I got an email earlier. I was spewing because I had this call to do. I was like, damn it, I want to go check out the new back office. So yeah, check that out.
Just quickly, Donnie, can you put 2 trades on at the one time, please asked?
Put 2 trades on
Like
it.
one up, one down. You know how she was talking about the squeeze? So can you put a long and a short on the one chart?
Essentially, you can if you're doing limit orders. So you can use buy stops and sell stops. So you can set a buy stop and a sell stop up, and then one of them is going to hit. The only reason I don't suggest you do that, that's what's called match betting. So that's like putting $50 on black, $50 on red. You can win sometimes in that scenario, but depending on the volatility of that asset, like sometimes during a squeeze, price can wick around. So it might pull you into a short position or a sell stop, and you're in a nice short, but then price can wick up and hit your buy stop, which will essentially cancel out your sell order. It'll close your position, and then you'll have no position because it won't re-enter the buy. It'll just close your sell. It'll cancel it out. And then you end up in no position. You've just been stopped out. So that's something to consider. And then even if you had stop losses tight enough, what can happen is you can get yourself into a sell stop, into a short position. Price can come up, stop you out of your sell stop, and then enter the buy stop. And then price can come back down and exit your buy stop. And it's your stop loss on your buy stop. And essentially you just get stopped out of 2 trades in one. In a point like that on a squeeze, unless you're using quantitative trading, you're like it's very gambly. Like it's hit and miss. Every now and then it might be sweet. You get yourself into a buy stop and it goes the way you want and you're laughing. But there is also the chance that it pulls you into both trades and smashes you out. So I don't recommend it. And what you're also doing by doing that type of strategy, by putting a buy stop and a sell stop, basically you're saying, I have no idea which way it's going to go, but I'll put some money on the table and see if I win. That's kind of what you're doing. So I'm not a big fan of that. Some people might be okay with that. But yeah, for me, that's just a gamble. I'd rather find good trades and put my money down on something that I believe is really good, rather than just sort of gambling on something I don't know what's going to happen. You just sort of, I hope I win. But yeah, you can definitely do it. You can put a buy stop and a sell stop on the same market. So yeah, hopefully that answered that. All right, guys. I won't see you guys until next Monday because Annie and Kat are doing, I'm not too sure what they're doing, but they're doing something cool this Friday, something different, I believe, which is going to be awesome. So yeah, see you guys on Friday.